Hello guys, welcome to a Train Parrot. I'm gonna do a very quick update. I'm gonna keep you updated on where is the liquidity right now pulling the price for the short term. Let's start with the CME gap. As you can see here, we have a CME gap that was formed on Tuesday 27 at the closing of the price into Wednesday. That gap spans from 60.5 to 61.8, and I'm pretty confident that the price might want to attempt to fill the gap, but maybe possibly it's not just gonna stop at 61.8. I'm gonna show you a fair value gap in here that we have spanning from 60.2 into 63.8. So not necessarily we're gonna take all of this. I will say the high likely scenario is to fill the gap of the CME that stops at around 60.8, and then the second half of potential incentive for the price to go higher is up until 63.8. If we were to do that, hopefully we're gonna prevent this MACD bearish crossover, which is actually crossing below the zero line. That's something that we have seen in the recent price action happening on the lows of the past 6 months. For example, in here, in May, we had one of those. We were very close to do such a thing again in February. Those are bearish crossovers that I don't treat as very high risk, but still it wouldn't be necessarily pleasant to see a bearish crossover so early in this recovery price action that we are seeing here. We couldn't even make it to half of the range. Short-term liquidations on the price, as you can see, most of them were produced by this week into 57.9 and this second week in here, which caused a double bottom. I am tempted to think that the price is going to first want to take the CME gap and the fair value gap. It's not guaranteed, but if we fail to do that, breaking above this 60K in here, and we saw a rejection right there, we could come for the lows for all the stop losses currently placed during this price action in here. Those are located from 57.8, the red ends at 57.1, but it could span a little bit lower into 56. I remind you that 54 is still very attractive as well, but that's a little bit too much in the future. The decision we need to take right now is whether if we get into 60, if we break out that, if we're going to be able to take the CME gap first, and second, the remaining part of the fair value gap in here. Hopefully, on the weekly, we end up holding the bull market support band. Closing this week on Sunday, like we are right now, it seems pretty bearish to me, increasing the chances that on September we don't see the yellow path playing out. And instead of that, we might be looking on September for another low somewhere in this vicinity. One of the things that is quite worrying at the moment is once again that the deposits are spiking into 1.8. In the past weeks, we were going into 108, very close to a ratio of 1, almost ticking the 3 boxes for bullish price sentiment, but now we are reverting back into this trend line. Are we going to break out above it, seeing extreme levels of deposits once again into September, or is this just a retest with potential further continuation into this area in here? That could be the case. If you notice, what I'm flagging in here is the 18th of September. There's an expectation that around that time there should be rate cuts. And I remind you that not all deposits get executed. Yes, during this period in here, it has been pretty much 100% a distribution period, starting with these deposits that actually sold, then these deposits that sold, and all these deposits in here that sold, causing a 30% drawdown. So whether the ones that we're seeing here are gonna sell right now or into a potential rip towards the rate cuts or post the rate cuts, that's impossible to tell. But what we know now is that they have deposit. We can also see the source to see the ratio of these deposits in a more granular way. In this area, we have 3 spikes, and in this area here, so far we have 1 very large spike. 3 spikes in here were enough to cause a 30%. 1 spike in here so far has caused around an 11% drawdown. On the order book, Still very shallow, nothing that we can find apart from the 46 to 47. It seems that they are fixed in the idea of catching that price. Guys, thanks so much for watching this update. Remember to hit the like. Let's get to 100 likes and I'll see you later. Remember, tomorrow there might not be any video. Maybe I'll make one on the iPhone on the move in the airport. If we get 100 likes, that will be the best incentive to do so. I'll see you tomorrow. Bye bye. I'll see you next time. Bye bye.